Welcome traders. In this video, we're going over another simple market metrics swing trade opportunity for the NASDAQ. So we are doing on NDX, the data feed, and you can use that to trade NASDAQ futures, minis, micros, the leveraged ETFs, TQQQ or SQQQ options. So there's a variety of ways you can trade this, but we are just going to track the signals only through NDX. So this is the triple GR method that Justin does talk about in his videos for getting some extra some trade signals. So what that is the three things that match up is the color background with the bar color and the signal. So as you see on this first one in January 5th of 2022, so you have the background red, sell red, candle red. It does not necessarily require the money flow oscillator to count. So that's incorporated if you turn the chop filter on. So this is without the chop filter. So this is version 2 of the other one that we were doing. And just like he advocates, if you're doing this one, you're going for a 1-to-1 on the risk to reward. So if you're doing a one lot, pretty much every trade, your risk is going to be different because you're doing a 1-to-1 of whatever the one lot of how many ever points. So if you're going for 200 points, profit target, that's your current risk. On the next trade, it could be less, it could be more. So you wouldn't necessarily size a dollar amount risk. And actually the results show you cannot do that. Because with this, you do not have a high enough win rate over the past 3 years of data, even though it is profitable. So we'll go over the signals. So you see over here on January 5th, that was an easy winner. So we'll scroll down on this to 2022. So 622 points. But then the next two signals, you lost 431 and then 398. Then you hit a winner on February 18th for 414. Another winner on the 17th for 575. And then April 6th, a winner on the sell for 468. 527. Let's see. That was a loss for 704 points. And then you had a winner for 704. So back to back, so those just canceled each other out. And then you have another two losses on June 24th and July 6th. So 552 and 275. And 715 plus 263 points. And then August 26th plus 406 had the pullback, went green. So it dropped another signal for you on August 29th. So plus 463. Then a pretty quick loss on September 12th. So minus 384. September 15th plus 306. 1024. It was minus 306. And November 3rd, minus 580. And 1110 ended up being minus 109. It did not come back. It did not actually go up high enough to get the profit target. But you took a smaller loss because you were taking this next signal on December 7th. So you didn't take the max loss on the previous trade. So this one was minus 262. And you're just kind of getting chopped up. So December 13th, minus 218. And then the last one, let's see, December 15th, plus 441. So actually for the year, you were up over 2,000 points. But you actually ended up being in a drawdown from peak to valley before the end of the year. January 11th, plus 327. and 221 minus 365, 36 minus 210, 310 minus 340, 316 plus 481, and 425 minus 261, and 428 plus 279, and then August 3rd plus 222, August 29th minus 388, September 21st minus 353, October 9th minus 294, October 20th plus 399, November 2nd plus 474, December 11th plus 255. So that was a slight profit for the year, plus 226 points. So January 10th, 2024, plus 261. February 21st, minus 181. And February 22nd, that was minus 34, where it closed outside of the profit wave before it came back up for the next signal. So let's see. Actually, I went 222. 410. You missed this 320. All right, so we'll see if this one looks like it would be a win. All right, so the low of the candle, the Hakanashi candle, not the real low, going to be 970. So that's less than 300 points on it. And the high of this next candle, 264. I don't think that's going to be a winner. So the buy 18,240.11 minus 17,970. $52, 269. We'll round it up to 270. Plus 18,240. So 18,510. It did not. So we'll count that as a loss. It's April 10th, immediately went against you, minus 117. On the 16th, plus 290. On the 29th, minus 217. May 3rd, plus 397. June 5th plus 435. July 17th plus 600. August 14th plus 373. September 4th plus 405. September 12th plus 570. October 31st minus 530. November 6th minus 387. November 15th minus 616. 12/2 plus 338. And December 19th minus 648. And just as the year's closing, December 30th, this one closed outside of this year, closed a few days, on the first day of the market open of 2025, but it was 376. We'll count that one in. All right, so let's correct this. Right, so as you can see, with the chop filter off, it is still profitable over the 3 years. It's pretty equivalent to the other one. But your drawdown was over $40,000 on this for a one lot. So that was from September 12th. Let's see. Yeah, of 2022. So that happened, and then October 9th of the next year. So it didn't become net positive again until July 17th of 2024. So it's a 50% win rate, which actually I'd like to see higher when you're going for one-to-one risk. But it's a little different on this because you're just doing a one lot for all 3 years. So you would have to have the same position size for an extended period of time in order to make this work. You couldn't size up like $1,000 per risk. It would have to be the same contract size. So it ends up obviously being your average winner is going to be higher than your average loser in order to make this profitable with the 50% win rate. Your largest winner is equal to your largest loser. They happen back to back on this one. So in order to technically trade this in your account, or like a one lot, requires to hold, at least $20,000. But then you have that large drawdown. So what you potentially gonna have 50 grand, 100 grand in your account to trade this if you were to do just like one futures contract. So potential is there for this. Maybe an option strategy might be better for controlling risk on this one. So it's just another potential opportunity for those who want to swing trade. But this one probably wouldn't be doable if you were to do any futures firms that let you swing trade, and or the Forex CFD firms, just because their drawdown limits are pretty tight, just normal day trading. So you're looking at like a 6% drawdown to blow the account. So there's no way. You could make this work, because if this is 3 years and if it's $100,000 account, you're making 20% a year on this if you're just to do this one strategy. So this would be someone's own personal account rather than any of that. So it is interesting. So I do prefer the other one, the version 1, where you add the chop filter in there. Your drawdown, the amount of months was significantly lower, and the dollar amount, I believe it was under $20,000. So that one was a lot cheaper. So we we have some more swing trades to cover on this. So I'm looking to do some forex and then a volatility index options play on it. And so the objective for all of those would be if you could, if one could incorporate all of those potentially into one portfolio, so they're uncorrelated, and someone was just swing trading their own money. So thanks for watching, and I'll see you on the next one.